Deriv bots are suddenly everywhere on YouTube, but traders are completely missing why. It's not the strategy that's winning, it's the execution speed, and why the gap between Deriv bots and MT4 Expert Advisors just became impossible to ignore. Welcome to FinTech Bot Focused, where we break down the bots, the tech, and the real numbers behind automated trading. If you're serious about understanding how AI and speed are reshaping retail trading, hit subscribe and let's dive in. Here's what most traders don't realize. When a Deriv bot executes a trade 40 to 60 milliseconds faster than an MT4 Expert Advisor on the exact same setup, that's not just a bragging right. That's money. Real money. And Deriv's 2024 to 2026 adoption surge, now moving over $2 billion in daily volume, proves traders are starting to feel the difference. Deriv's 2026 API redesign cut latency from 120 milliseconds in 2024 down to 40 to 60 milliseconds today. On paper, that's 60 to 80 milliseconds faster per trade. But on a $500 account with 20 trades a month, that speed advantage prevents 8 to 12 slippage losses. That's $40 to $80 recovered every single month. Scale that over a year, and a typical small account trader is looking at $500 to $1,000 in recovered capital just from execution speed. That's not strategy improvement. That's physics. Now here's where it gets really interesting. Because Deriv bots execute faster on stop losses, something else happens. Drawdowns recover much faster. With MT4, a typical drawdown recovery cycle takes 8 to 12 weeks. With Deriv, that same recovery cycle now takes 2 to 3 weeks. That's 5 to 6 weeks of difference on a single drawdown event. What that means is, traders can restart positions sooner. They can compound gains faster. They can get back into their normal trading rhythm without that long, painful recovery period grinding their psychology down. For traders with accounts under $2,000 trading high volatility pairs like EUR-USD or GBP-USD, Deriv bots are now outperforming MT4 Expert Advisors by a measurable margin. Deriv's own case studies document an 8 to 15% annual ROI difference. That's not luck. That's latency, infrastructure, and stop-loss execution speed creating a genuine edge. The bot strategy space has always been competitive, but execution infrastructure just became the bottleneck. Two traders can run identical strategies, but the one on faster infrastructure wins. Deriv's infrastructure investments over the last 2 years have shifted that equation. The bots breaking out on YouTube right now are getting views not because the strategy is new. They're getting views because the execution is measurably better. For anyone trading small accounts or testing new strategies, the speed difference between Deriv and MT4 is no longer theoretical. It's documented, it's reproducible, and it's changing the risk-reward calculus for an entire segment of retail traders. Before you go, make sure you join the FinTech Bot-focused newsletter. You'll get updates on new bots and AI features, strategy breakdowns, honest takes on what's working, and early looks at new automated trading tools. Plus, you can reply with video topics you want covered. The link is in the description. Join the community and stay ahead of the automation curve. Disclaimer: this video is for educational purposes only, not financial advice. Trading, especially automated trading, involves risk. Always trade at your own risk and test everything before going live.